Time now for some more business news, and we're starting with the ongoing saga of the US-China trade war, as prospects for a preliminary deal to de-escalate the conflict seem to be slipping ever further away. Now, Brian Quinn is here from our business desk to fill us in with the details. Brian.
Well, Tom, a number of factors are threatening the potential Phase 1 trade deal initially predicted to be signed in mid-November. First, Chinese demands that U.S. tariffs be lifted before striking the deal, that leading U.S. negotiators to raise their own demands in response. Now, a pair of bills passed by the U.S. Congress condemning Beijing's crackdown on protesters in Hong Kong are further complicating the situation. China's Commerce Ministry said Thursday it will strive to reach a Phase 1 deal, keeping communication channels open. But new American tariffs on Chinese goods are set to take effect on December 15th as the holiday shopping season hits its peak. Donald Trump says he'll be sticking to his guns.
So, I can tell you this. China would much rather make a trade deal than I would.
Then why haven't they?
Because I haven't wanted to do it yet.
And why haven't you wanted?
Because I don't think they're stepping up to the level that I want.
Well, markets are growing increasingly pessimistic about the prospects for a deal this year, it seems. Asian indexes taking a slide Thursday. The Nikkei in Tokyo finishing the day down nearly 0.5%. Hong Kong's Hang Seng with a big drop down 1.6%. Shanghai off around 0.4%. The Kospi in Seoul ending the day down 1.33%. European indexes following that trend at the open. London down over 0.6%. Paris off over 0.7%. The Frankfurt DAX down 0.2% at the open. One of the new listings hitting the Paris Stock Exchange today, Française des Jeux. The French national lottery company is seeing 50% of its shares floated on the public markets. It's part of a controversial wave of privatizations led by the French government as it seeks to raise money to fund innovations in science and technology. Shirley Sitbon has the story.
France's national lottery is the first major company to be privatized under President Emmanuel Macron. The share's price range had initially been estimated between €16.50 to €19.90. That price has now officially been set at the maximum as the company prepared to hit the public market.
This price is at the high end of the range we had announced. That's due to the very high demand in this operation, whose success has exceeded our top expectations.
About 500,000 individual investors signed up for the lottery's IPO, next to institutional investors who rushed to buy shares. The state has lowered its share from 72% to 20%, which will allow it to raise more than €2 billion. Money meant to lower state debt and to boost technological innovation.
The summed raise is up to €400 million higher than initially expected. The money will be injected in a special fund for innovation. Those funds will not have to be used to develop France's economy.
The government hopes the lottery's IPO will generate enthusiasm from small investors and help privatize a series of other state-owned companies.
Finally, for business, Google has become the latest tech giant to take action on political advertising. Political campaigns will no longer be able to target ads at internet users based on their presumed political affiliation. Google says it will also clarify its policies to combat false claims in political advertising and ban doctored videos known as deepfakes. Political ads will still be able to target users based on age, gender, and location. The move puts Google closer to the policy stance of Twitter, which has banned political advertising altogether. It's also likely to add pressure on Facebook, which has declined to ban false claims in political ads on its networks. A big story coming up with several, obviously, very crucial elections in the coming months, Thomas.
Okay, Brian Quinn with the business news. Thank you very much.